It's Thursday, April 4th, 2019, and welcome to Understanding Insurance, a live video blog brought to you by Guyor Insurance Agency and Insurance Benefits Unlimited. Well, folks, I think we got our voice and our lips matching together. We have finally figured this thing out, and if you've noticed, we also have I'm looking at the screen. Where's it at? There it is, backwards. I've got that set up. What that is for you guys, you can instantly comment on this live video, and we can actually answer your questions. Never done it yet live, but it's all set up, so we're ready to go. So if you guys are joining us for the first time, I'd like to introduce myself. I'm David Guyor, and I am the owner of Guyor Insurance Agency and Vice President and Marketing Manager for IBU, which is Insurance Benefits Unlimited. I have been in the industry for 10 years, and what I hope to do out of this video blog is to help and educate. That is the main goal. You know, I've been in business for not just the insurance business, but I've been self-employed for 30 years. And so seeing my face, hearing my voice, you know, nobody likes doing all that stuff, but I want to stay focused on what this video blog is about. It is to educate and help y'all. And I'll be honest right up front. I want to prove to you I need to be your insurance agent. You might be saying, why you? Well, when you call, you're going to get me, not someone else. That seems to be probably the biggest thing that I hear from folks, is that when I call my agent, I never get them, or I get the receptionist and I never get a return call. But I promise you, that is why I want to be your agent. I want to be your exclusive agent. I will take care of all of your insurance needs, homeowners, auto, life insurance, health insurance, all the little toys you might have. I'm your exclusive agent, and that's the reason why I'm doing this blog as well, is because I want to be your agent. And that means when you call, you're not going to get the receptionist, you're going to get me, and I'm going to walk with you hand in hand through any of your insurance problems or claims. And of course, I'm just one person, but I promise you that if you leave me a message, I will call you back, period. Period. You're not going to find that anywhere else, because we're in an industry now where, and again, I'm not here to chew on anybody, but I've been doing this long enough, and I have met a lot of agents, and the problem is our society, y'all know this, our society is about making more money, getting more clients, and unfortunately, this industry really pushes us agents. We don't get much renewal commissions as much as we get higher commissions when we get someone to sell them a product. So for me, I have learned over 10 years that if you take care of you, then you're going to take care of me, because it's not about me. Kind of the first thing that the first sentence in the Purpose Driven Life book is, if you've read that. But on today's show, what we're going to do is we're going to cover a couple of topics that we've already talked about in the past, but I've got a part 2. So you own one of these things. It's called a homeowners policy. And what does it cover? Really? No, really. What does it cover? We're going to do part 2 to that, and we're going to follow up some questions. I want to follow up a question on life insurance. Unfortunately, my brother has worked with the company for 17 years, corporate America, same company, 17 years, and he was let go this week. And it's sad, but it's part of, he's like me, a little bit getting older, and so we're going to discuss what one of the obstacles or challenges that he's faced with now, besides trying to find a job at 50 years old. What does he need to do to take care of a policy? But first, insurance news that matters. Well, I don't know if you knew or have heard, but I'm just going to read this. Basically, a consumer alert: fake insurance, auto insurance. Our Arkansas Insurance Commissioner Ellen Kerr yesterday released the following alert to Arkansan consumers regarding individual posing as car insurance agents to sell fraudulent policies at car dealerships. Now, it's hard to believe that that's happening in our own country. Yeah, whatever. So here, let me just continue reading this thing. It says AID, which is Arkansas Insurance Department Criminal Investigation Divisions, received complaints from Progressive Insurance, right from Progressive Insurance, about people posing as Progressive agents selling auto policies. And here's the thing, Progressive, so far, Kerr has announced that there's been 240 initial cases. That's quite a bit. And you're probably saying, how in the world is someone doing this? Well, let me just read the rest of this. This is the company alleges that individuals frequent area car dealerships representing themselves as a Progressive agent and offers their services. Now, here's how they get it. This is how they get your money. So apparently, these policies were purchased by you or that person at that car dealership that says, hey, you're an agent and I want to buy this car, so here's some cash. So they're going to a lot of these used car dealerships, I'm sure. But they're giving cash to this fake agent, and then that agent is actually using a checking account, which they're saying is theirs or whatever. And they're basically going out there and purchasing these policies, and then they're turning around and going back to Progressive and saying, hey, this is this one's supposed to show up on my account. They cancel it. They kept the cash from that individual, and unfortunately, that turned sour, because here's a note I want to bring up that our Commissioner Kerr said, and here's a number. If this is something that has happened to you or you know anybody, this is something to call our Commissioner about. Because fake and fraudulent insurance policies, it is a Class D felony. A Class D felony. So if you are the victim of this fake agent and you are pulled over by an officer and they find that this is a fraudulent ID card you're giving them, you can be charged with a Class D felony. And it says maximum penalty is 6 years and $10,000 fine. So bad news for you if you are one of those folks that happen to get ripped off by one of these crazy looking folks. All right, I'm going to keep moving on. We have talked about this in the past. This bill, SB 480, was to establish the Healthcare Contracting Simplification Act and to prohibit anti-competitive practices by health insurance companies. Okay, that is a mouthful. I got worked up today, and it wasn't so much about this, but this got me going, which got me on the one we're going to talk about here in a little bit. So, what this bill, the SB 480 was, is it basically is sitting at Asa Hutchinson's fingertips. He supposed to sign it. I don't know. I have yet found out today if he has signed it. But bottom line, this is how it's going to affect us, Arkansans. It will permit providers to discriminate based on the type of health coverage patients have, and it can increase the likelihood of patients receiving surprise billing. Okay, surprise billing. That is a word none of you have heard. What this means is, the way insurance is set up is, I have an insurance card. I have to have little things. I have an insurance card. Okay, I go to Baptist Health. I show my card. I get a discount because I'm a card holder from, let's say, Blue Cross Blue Shield. Blue Cross Blue Shield is going to say, hey, Baptist, you're in a health network that we are all in, and we, because of our client, hand you this card, so you automatically give us, I'm just using numbers here, we're going to give you half off. So that $10,000 bill is now cut in half because I'm a member of the club. I have a Blue Cross Blue Shield, and Blue Cross Blue Shield says, hey, Baptist is in our network. Well, here's what this SB 480 bill can do. Surprise billing means is that the Baptist Health can turn around and bill you for the differences because, let's say, the anesthesiologist is not in the network. but yet Baptist Hospital is. So you're going to get an extra surprise bill. I'm not going to keep going on this, but folks, I will tell you, today was not very productive for me. It's kind of funny in this industry, when the weather's nasty, most people don't call. So I spent quite a bit of time sending out multiple emails, not only to my clients, but also to the senators because of these bills. Folks, we're not listening. We're unplugging, but yet we complain about this. And again, like I said earlier, I'm getting on my high horse about this because it's frustrating me, because this is costing us consumers more money. Okay, I'm an agent. I make money no matter what I do selling a product. Anybody, you go punch a time clock or you sell widgets, it doesn't matter. We're going to make money, but it's all about doing what's right. And unfortunately, I just feel, and from what I can interpret, and these bills are very thick for me to read. Sometimes I rode that little yellow school bus, but the thing is, this is going to affect us. So Asa Hutchinson has this on his at his fingertips right now, and he's going to do something with it. Here's the one that got me riled up today. Now this one really got me going. This is the SB 520. I know this could be boring to some of y'all, but you're tuning in because we're educating. Okay, this SB 520, to clarify, this is to clarify the state insurance department's regulation and enforcement authorizing concerning pharmacy benefit managers to modify the Arkansas Pharmacy Benefit Management Literature Licensure Act and to declare an emergency. Now you're probably going like I was, and especially reading this thing. Huh? Huh? What did you say? Now this is what got me worked up, and why I probably sent out 200 emails today. And I hope I don't get in trouble by one of these senators, but I've asked all of them, and I will provide all their answers if they respond in next week's video blog, which is every Thursday at 8 p.m. Okay, I'm just going to read what's on the bill. It says pharmacy bill. We already talked about it. It passes, basically is supposed to be voted on Monday. I went to, there's a website you can go and look at these bills and see where they're at literally by the second. And this thing went before the House or the Senate. I'm not very educated on that, but basically it was read, kicked out, read again, kicked out, read again, kind of rediscussed, and went through it 4 times, and from what I could tell, it was accepted. So now it goes before the committee to say, hey, are we going to make this into a bill? But let me read this to you. It says, this will add millions of dollars to cost, making fees effective immediately. So basically this emergency thing, let me keep reading this because I made good notes on this. So it says Senate Bill 520, legislation written to guarantee profit for pharmacies in Arkansas. It passed. If passed, an emergency clause in the bill means increased dispensing fees will take place immediately upon our governor's signature to this. Costs will increase immediately as well, even before the rates. This whole thing is supposed to really kick in 2020. But as soon as Asa Hutchinson signs it, boom, it's in effect. What you're saying is, so what does this mean, David? Each prescription, think about that. How many prescriptions do you get filled a month? Times all those other ones, you all know what I'm talking about because you sit in line like I do at Walgreens or Kroger's. Each prescription filled would approximately cost an additional $10. That's what this fee is for. They're giving this dispensary fee to the pharmacy for every prescription filled. This thing is supposed to, right here it says, will add millions of dollars to an annual pharmacy cost by guaranteeing literally a mandated dispensing fee. And it can cost, estimated that this bill in its current form can increase the cost of our fully insured products by more than $58 million in the first year. So for every prescription written by every pharmacy in the state of Arkansas, there's going to be a $10 fee. and they estimate it's gonna generate $58 million. So, not to keep wearing this thing out, but folks, this is going to cost us. I mean, not that healthcare hasn't already cost us. So $10 for every prescription. Is that going to come out of my pocket? I don't know. But if it does come out of Blue Cross Blue Shield's pocket, who do you think it's going to come out of? Because as I always say, insurance companies are a for-profit industry. Okay, they're there to make money. So let me get back over one of my slides because I shut this thing up out of my ugly face. I build these slides for a reason. I get all excited. Oh yeah, so I just read that right there. So at the very bottom, it's increased the cost of our fully insured products by more than $58 million, $10 or $12 million of which directly impact small businesses, and this is expected to raise our premiums possibly up another 3%. Here is a list of what I did is I just kind of threw some of them out there. My website has it. I think I already posted it today on my personal site as well as on the Guyor Insurance Facebook site, which, by the way, we're going to try to get on YouTube as well here in the near future. But here is the folks that are in your area, their phone numbers and their email. Please, please, please do what I did. And I just sent a thing. I'm not the smartest person in the world. I just basically said, hey, can you explain this to me? Because from what I could read, it looks like this thing's going to cost us. So there you go. All right. We're going to go on to the next step, which is today's topics. But first, I want to recap about what we've been doing last year. In last show. We were talking about my brother. I want to show you this stuff. Right here, I think you guys can see this. So basically what has happened is my brother worked for his company 17 years, and like most executives, you get a packet. And that packet includes profit sharing, 401ks, stock options, all that stuff. He got, you know, more than what a normal employee would get in a life product. Well, a couple weeks ago we talked and we described the different life products, and you can go to my Facebook page here. I'm leaving them up there so you can kind of recap that. But here's what I wanted to bring up in today's show. So my brother talked to me 17 years ago, and he said, hey, how much would a policy cost me? Right here, you're going to see a 10-year and a 20-year. If he would have purchased this when he was 33 years old, you can see the rates right there. 10-year rate for $100,000 is a lousy $10.03. Look at what a 20-year, which would have put him out at 30, 40, 50, 3 years old at $13.57 a month. Now that he is unemployed and he's needing a policy, he is 50 years old. Look at the same policy. $100,000 for 10 years is $23.02. And a 20-year term policy for $100,000 is now $34.74. So the reason why I wanted to recap that life policy stuff is because don't rely on having your life insurance to go with you the rest of your life. You know, you're going to retire from wherever you work unless you're like me and you're self-employed. Do what us self-employed folks do. We buy our own products, especially in our life products. So I'd love for you, my phone number and email's right there. I'd love for you to text me, give me a call. Let me just give you a quote. I'm not going to sell you on it. I just want to be able to show you what your rates are. And two, there's a lot more. You need to watch that show or the video blog about 3 weeks ago. But the next thing we're going to talk about on today, because I try to keep this thing moving pretty fast and within 30 minutes, is we're going to talk about homeowners insurance. I want to continue that from last week. I know we basically covered what the biggest problem that most people tell me is why are my rates, my homeowners insurance, so high, and why does it go up almost every year? Well, right here, this is a recap from last year, and I'm going to move some of this stuff around. Just move this out right there. So basically, the reason why your homeowner's insurance goes high is replacement costs. RC, which means replacement cost, and roofs. I was just talking to a gentleman a couple days ago, one of my insureds, and I was pleased to hear that he is going to replace his roof on his own. He's not going to wait for the insurance company to pay. And that's what's going on. Americans aren't being responsible. I know that's a mean word to say, but if you own a home and you have a roof, it's your responsibility to pay to maintain that roof. But a lot of folks will say, I'm waiting for the next hailstorm. So the biggest problem that we have in homeowners is roof damages and replacement costs. And what I mean by replacement is right there, the first bullet says your best policy is an RC, replacement cost policy, not an ACV, actual cash value policy. Why? Because it gives you a new home, which is of course more energy efficient, new content and all that. And what I mean by that is it gives today's cost to what it was back when you bought your house. So let's say you bought your house 20 years ago. That 2x4 was probably only $1.25. Now it's $3. And if it's like Bologna, Arkansas getting blown away for the second time, some of the lumber companies were gouging the insurance companies by charging $5 and $8 a stud. But your problem is the labor costs have gone up since your home was built. Lumber prices, like I just said, have gone up, and the content of your personal items might have gone up as well. That kitchen table or whatever has not quite doubled, but it's gone up. So our solution is buy a catastrophic policy. That's if you want to save money, because like I always tell people, what is insurance? Insurance is just a vehicle for us to pass a risk onto somebody else, aka the insurance company. I personally have more of a catastrophic policy. What that means is I'm responsible for the first $11,000 on my roof because I have a new roof. Second, my hot water tank, all my plumbing, sewage, all that is underneath the house. And we have a big, I can stand up and still not even touch my head on the bottom of our home. So if I was to have a pipe burst or sewage overflow or anything, it's going to go into the dirt, so that's why I chose that. But I can't control the cost of replacement. And so catastrophic policies are basically just that. You have a partial fire, burn down just the kitchen, it's still going to fix your house, but it will, replace your house with new materials if you lose it in a fire or a tornado. The one neat thing about our insurance commission or our insurance department is Arkansas has a law in the books that says that you can, or if a home is destroyed by a tornado or fire, they have to be replaced. But do remember that earthquake coverage is a separate cost, so it is not the same. It doesn't always come. Now, I have seen some policies that do include it. Okay, this is kind of itty-bitty, but this is the last part of our discussion about homeowners insurance and what do they really cover. With our weather-related exposures that are coming now, I wanted to cover some of the big stuff, which is going to be about just that. What would happen if we had a tornado or something like that? And so you're going to see right here, falling trees. I get that question a lot, which is my neighbor's tree falls on my house. Who pays for it? It's his tree, not mine. Your homeowners right here. It says on your property, your neighbor's tree or trees, whoever's property is damaged by that tree, even if it's your neighbor's, that person's insurance pays for it, and then you have to pay your deductible. Uh-oh, that's not good. And if the tree falls because of rotting, let's say your neighbor's tree is rotting away and you keep telling them, hey, we got to get this thing taken care of. Sometimes it might be worth you helping because it only is going to come around to you. If it's a rotting tree and it falls, the insurance company could say, hey, it's not an insurable, what we call a peril. And so your insurance company might not pay. And even if it did, if it falls on your home, you have to pay that deductible. Sheds and additional structures. This is explained in your coverage B, but bottom line, the reason why I wanted to talk about this is because some folks have a barn, some people have a pretty good sized shed in their home, in their backyard, like a 20 by 30. I've actually insured quite a few homes that have those. And so what happens is your coverage B of your policy is your garage. It is not heated and cooled. And so when you look at your homeowners and you say, hey, I got $200,000 in the home. Well, that's only for the home that's heated and cooled. That's not for the garage or your outshed. So if you have a shed outside or something, that's why I always ask people, is there something outside? And even though they say yay or nay, I go out and I look at Google Map and I want to see for myself, because it's my responsibility to take care of you the best that I can. Okay, and that's kind of the extra steps that I personally take, is to make sure. And I have caught a few people that have had a shed back there, and I said, hey, you got a shed and it looks kind of nice and all that. Oh, well, you know, and so I just make sure they understand that, hey, you know, that's not including your homeowners. We need to increase that policy if you want that covered. So sheds, you need to look at that. It's usually 10% of what your homeowners what your homeowners is covering for the house. Debris removal. I had this discussion with my father-in-law. He's looking at becoming self-insured, meaning he doesn't want to have insurance. He thinks that he might take care of it on his own. Well, like I told him, I said, well, you got to understand that if your home is destroyed by fire or tornado, it would be your responsibility for you to get rid of the debris. So usually the insurance policies say reasonable expense, and I have seen some stripped out policies. That again is why your agent has to kind of know you and stuff like that. But I've seen some as low as just $5,000. That means when that tornado comes through and your house is blowing all over the place, you still got to get rid of at least what's connected to the slab. So it's good to have insurance there. Also, I was reading about pollution. I'm telling you, folks, I could go on for days about insurance, but some people don't think about, let's say you have paint cans, gasoline. EPA could come in and say, hey, you had an excessive amount of gasoline stored, and so that has leaked into the creeks, and you would be responsible. And some homeowners policy does not protect against pollution like that. A loss of a tree or shrub, some people don't realize, but yes, you can actually get that tree or that shrub paid for. Most policies pay about $250 to $500 per tree. They do cap usually. Fire department calls. Who pays? Most people don't think about that, but if you do have a fire, I know in rural areas they always have some kind of association. The voluntary fire department would send folks a bill. I don't live out there, so I don't know how that is today, but I'm assuming it's the same. But with your homeowners policy, if there was a fire and they're called out on scene, somebody's got to pay for that. It doesn't always come with the privilege of living in your city. So an insurance policy, and most of them take care of whatever they charge. Loss of use. Okay, this is a little soapbox I got onto, or it seems like I get onto during the holidays. And it is unfortunate. During Christmas, you'll see a story on one of the news channels about an apartment complex catching on fire, and you know, the kids have lost all their Christmas presents and stuff. Renter's insurance is cheap. It's cheap. You can get it very, very inexpensive, $150 to $300 a year, and that's what it affords you. Even your homeowner's policy includes that. It's a percentage. It's a percentage of your policy, but it pays for a hotel. They don't even pay for food. So because they understand that you no longer have a home, so they've got to put you up somewhere, and they have to pay for your food because you can no longer cook in your kitchen. And the last item that we're going to cover, because it's 8:30, is building ordinance. Now, that is something that again, most people don't realize, but that is where you would basically, if your house was destroyed, and the city says, hey, we're going to expand this road, and any home that is on this road is grandfathered. And if for some reason it is destroyed, we, the city, have the right to set in an ordinance that says you need to move that house back another 30 feet because we're going to give we need that extra space for possibly growth on that road. So again, most homeowners policies do cover that, and it's a certain percentage of it. So looks like that's pretty much it. It is 8:31. So again, I really appreciate y'all watching this vlog. I hope that you will share that with someone that you know, and plan on tuning in every week. Again, 8 p.m. Keep it pretty short, sweet, and simple. Here's my contact information right there. I would love to hear from you, and I'd love to be your agent. So y'all have a great week, and I hope the weekend is just as good. Thank you.